This is Funded. When you subscribe, you turn knowledge into money. Markets don't run on intelligence, they run on stories people agree to believe. Every era crowns its narrative, every narrative creates confidence, and confidence, left unchecked, always collides with risk. Right now, Bitcoin lives in that collision zone, not as a price chart, not as a rallying cry, but as a challenge to how money works, who controls it, and what happens when belief outpaces structure. The host of The Everyday Investor, Darcy Ungaro, returns. Darcy, you've spoken to founders holding Bitcoin on corporate balance sheets. What surprises you most about how this works in practice?
Yeah, thanks, Andrew. So, with the whole kind of Bitcoin holding it on your balance sheet as a corporate, what surprised me most about that was probably how simple it is. I've done a little bit of research into strategy, or formerly known as MicroStrategy, and I caught up recently on my podcast with Steve Ornstein from Locate Technologies, which is one of New Zealand's latest IPOs, finally, from Australia, and they adopt a similar strategy. And when I was talking to him, it was the same sort of thing. It's really simple, and it's almost as simple as you or me acquiring Bitcoin with our spare cash. The difference is with a corporate, obviously you're a publicly traded company. You probably have a board of directors that you have to deal with. You have systems, you have processes. You can't just kind of make it up as you go along. The wallets, the custody, like how you actually hold the Bitcoin is really important. Insurance is really important. And just constant disclosure and making sure your investors actually know what you're doing. But other than that, it's actually incredibly simple. Like businesses go through hell just to get their fiat currency on their books. Diversifying some of that cash into a different form of money, well, why not? That just sounds like a bit of risk management to me.
How do you personally view this strategy? There's a lot of people talking about MicroStrategy as going to blow up because they've used so much leverage to buy has 650,000 Bitcoin, and they've kept leveraging every chance that they could, borrowing in fiat to buy crypto.
Yeah.
The problem is, when the price of the share price falls below a certain point, there's going to be a call, and they're not going to be able to meet that call unless they start selling Bitcoin.
Yeah, there's so much involved into that. Firstly, it's Bitcoin, not crypto, and there's a massive difference there, because if you were trading your cash in your balance sheet for something that can literally be printed out of thin air, just like your cash can be, for another version of that doesn't make any sense. But they're trading it for something that's finite. There can only ever be 21 million Bitcoin, and Strategy owns, I think, just over 670,000 Bitcoin. They bought 10,000 last week, and that whole strategy, it really is a leverage play. It's an amplified trade, because what you're doing is you're buying shares in a publicly listed company who has figured out the wiring to effectively tap into traditional capital markets to take that capital out and convert it into digital finiteness that they hold on their balance sheet. And so now you're investing in a company that has some operational activity. Yeah, it's a data analytics company, software company. But now their profit, which sits on their balance sheet, if there is cash that sits on their balance sheet, is traded for Bitcoin. And so where you get this extra volatility happening is where the Bitcoin price runs up. Their valuation becomes more, which allows them to hit the at the money feature or issue more preferred shares to extract more capital in to convert it to more Bitcoin. So it creates this flywheel thing. Unfortunately, it goes the other way, and even just fear of them being excluded from an index or fear of the price of Bitcoin falling will have an outsized impact on the sentiment for strategy shares. And I think that's why we've seen such volatility. So yeah, as a strategy is what I think about it personally. Well, what I think about it personally is, I think, great. There's a company out there that I can invest in that has a Bitcoin strategy, which may give me better performance than holding the underlying asset myself, which I do. On the other side, when I put on my financial advisor hat, I would not advise people professionally to hold strategy. However, I help people who want to hold strategy within their KiwiSaver and their investment portfolio to acquire it. And there are still people doing it, just like there's still a madman at the helm of strategy that's buying Bitcoin, even though his share price looks like it's tanking. So he knows something that maybe we don't, or maybe he has some volatility tolerance that everyday investors ought to learn about.
Yeah, fuel the fire. I guess if I was gonna ask one question, it would be about incentives. How is Michael Saylor taking his pay? Is he taking it in US dollars and he's taking as much as he can? Or is he taking the minimum amount to live on and converting everything he possibly can into that micro strategy?
Yeah, I'd say the latter, man. He gets it, right? Like he is a proper Bitcoin maxi. And so regardless of whether he's right or he's wrong to be that way, he's living it. And I think like I've seen him present live before. You can kind of tell when you're seeing somebody on and off stage whether or not they're legit. And he believes that he walks the walk. Yeah, he might be crazy. He might have zero risk tolerance, but who knows? Time will tell.
You've highlighted that most crypto activity in New Zealand is taxable. Why is that catching so many people off guard?
Sure. Yeah, I think, and maybe this is to do with the adoption waves. So what I mean by that is that when there's a new technology, there'll be some people who will gravitate towards it before the others do. Some people might either see the opportunity or they're fascinated by the technology, whatever it is. And I think the first cohort of people who adopted Bitcoin might have been those who would probably identify with the cypherpunk movement, or maybe they're hardcore libertarians, maybe they're technologists, and they love the idea of mixing their two favorite things together, like finance and mathematics. And those types of people often, but not always, will have a certain disregard for authority, let's say, which makes them more likely to disregard some of their obligations to traditional financial institutions, specifically the IRD or the tax department. Now, I'm not saying that people that are involved in crypto will not pay their taxes or are less likely to pay their taxes, but I think there's definitely a subset of people within the earlier adopters who who are grandfathering into a new regime, whereas when they got into it, they genuinely thought they were doing something off the radar, much like collecting stamps were back in the 60s. I don't know, but they probably thought they were doing something, and then they discovered, oh, this is something the taxman cares about. Stuff that. But I think things are now trying to kind of get there. When I say trying to get there, I think people are now slowly understanding that they do have obligations to the taxman. Like if they take their New Zealand dollars, they buy a digital asset like crypto or Bitcoin. Then if there's a gain on that asset and they trade that asset for another digital asset, that creates a taxable event. If they trade it back into New Zealand dollars and they basically take a profit, that creates a taxable event. A loss, taxable event on the other side. And the onus is on people to record those transactions. And again, it's not something that people really want to do, because you can literally wake up at 3 a.m. and do a trade on your app, on your wallet, on your phone. And it's got nothing to do with going through traditional rails, which have a delay, a time delay, and you have to wait for markets to open. So when you make something that convenient, they're less likely to keep records when they make those transactions. And so a little bit of this is a structural issue, just it is what it is, but a little bit of it is also the DNA of the early adopters, in my view.
What are the most common mistakes people are making around crypto tax? Is it just not talking to accountants early enough, or they think maybe it's only $10,000, not a big deal?
Yeah. Yeah. I think there's a bit of that going on, or they haven't used an accountant before. So what should they do? And there are applications out there, platforms that can help you track your crypto trading activity. But I think, again, it just doesn't meld well with the ethos of this society or this group. Like the platforms that you buy it from, I think can be helpful to some degree in providing data around what you bought and when. But yeah, I think there are accountants starting to appear, though, thankfully, that have done the hard yards. They've done the research. They realize that it's not something that just criminals use. Regular people use it as well, funnily enough. Just like criminals use fiat currency, normal people use crypto. And so some accountants are retooling their brains, and they're understanding what the rules are, and then they're actually helping their clients who come to them, rather than say, I don't know, maybe go online and do some research or download an app.
For people that do believe in Bitcoin or the other crypto funds of the day,
Yeah.
but they're uncomfortable with self custody. There's a lot of stories about people losing their wallets or losing passcodes. What are the trade offs of ETFs buying through KiwiSaver or through listed companies?
Cool. Yeah, great. Well, you've listed them all right there. So you have direct custody, exchange traded funds or ETFs, KiwiSaver, or buying what I would call picks and shovels companies like Strategy or mining companies. So Bitcoin treasury companies or mining companies. Um, there's trade-offs, right? You get more volatility or less volatility. With holding Bitcoin directly or crypto directly in your own wallet that you have 100% control of, whether it's an app on your phone or it's a cold storage device, that is the absolute gold standard. And everybody should have at least some Bitcoin on their own device that they have practiced very safe security on, because that is an alternative form of value. You are literally your own bank. But from a tax point of view, you're going to get nailed if you want to take profit. And a really good way to think about this asset legitimately is to set a portfolio allocation, like how much of my net worth am I going to put in this? For a lot of people, it'll be somewhere between 1% to 3%. With a lot of our traditional portfolios that we might construct, it'll be max 3% that we would recommend. And everybody should have that in my view, because it's kind of like insurance. Owning it, though, when you own it directly, you have the hardest tax liability. And you also have the biggest weight of responsibility. If you lose those keys, you lose those coins. Gone. If you hold it through an ETF, an exchange traded fund on an app like Sharesies or Hatch, you have a lot more simplicity. Now you're taking a different type of risk. It's not your hands that you have to worry about. It's the hands of the provider that you're investing through, whether that's BlackRock or Fidelity or one of the other providers that operate these ETFs. You're not necessarily taking a risk in Sharesies and Hatch operationally maybe, but and custodial definitely, but you're actually taking a risk with the custodian that ETF uses in the United States as well. But tax, a lot simpler. KiwiSaver, same thing. And it's a fantastic way to increase the potential likelihood of greater returns without increasing the likelihood that you're going to have a catastrophic loss in your portfolio, especially if you keep the sizing small. And then lastly, with companies that are mining companies or treasury companies, you're getting more volatility. So that means that you get a possibility of achieving a better rate of performance than just holding Bitcoin and doing nothing with it.
If we look ahead 5 to 10 years, what do you think everyday investors are going to wish they understood better about the money or the risk side of things with Bitcoin?
With Bitcoin?
Yeah.
Yeah, well, to me, I think that Bitcoin itself today by many is viewed as risky. I don't believe it's risky at all. I think it's volatile. And there's a big difference between that. But in New Zealand, most fund managers and regulators will sell volatility and risk as the same thing, but it's not. Risk is the chance of the complete loss of it going to zero. I don't think Bitcoin will go to zero. I think, yep, anything's possible. Quantum computing, for example, but that's going to make fiat go to zero before it makes Bitcoin go to zero. So I don't kind of buy into the risk piece, but volatility for sure. And I think what people need to realize is that the system that they already think is safe and reliable and true and something that they can hang their hat on, i.e. the fiat financial system that we currently live in, where the New Zealand dollar is in charge, that is the risk that we don't talk about. And if that fails, everything fails with it. The custodians, the product manufacturers, the regulators, everything fails. Your wealth is worth zero if all you can do is funnel it into a New Zealand dollar, which has gone to zero. Whereas if you hold Bitcoin, in my mind, that's the safest thing you can do. Not all of it. I'm just talking about a small proportion of your overall wealth. Because if that situation happens where everything goes to zero, even a 1% to 3% allocation to Bitcoin in your KiwiSaver could mean that that's now worth millions and millions of dollars in the new currency, of course, because there's a currency reset in that situation. But everything else has gone to toast. So I think we've got our heads in the sand. I think some of us are willfully blind because our revenue models demand it. But again, doing this podcast 8 years ago forced me to look at it for what it is, not for what I wanted it to be. And now that I've seen it, I can't unsee it. And I know where the real risk is, and it's not with Bitcoin.
Well, I hope if there is a jubilee, I've borrowed $5 to $10 million the day before. With regard to the infinite supply of money and the reported benefit of Bitcoin being finite, how do you, as a Bitcoin fanatic, explain away that there is infinite numbers between 0 and 1, and as percentages, as Bitcoin keeps is the term forking, that we just have micro percentages of Bitcoin. So there's only 21 million Bitcoin, but there's an infinite supply when the percentages of Bitcoin expand.
Yeah. There's a lot of zeros behind one Bitcoin, thankfully, which means we can all own some, but there is literally an infinite amount of fiat currency that will jam itself in these divisible units of finite Bitcoin. And I think it's kind of like the equivalent of getting a pizza and then just keep on dividing it into different slices, right? Like at some stage, the slices are nothing, but it's still just one pizza. It's still just one Bitcoin. It is finite, and there's only ever 21 pizzas, right? And so I think that as time goes on, we're going to see that the units that we use to describe Bitcoin will probably change. Like right now, we're talking about numbers of Bitcoin. Like Strategy bought just over 10,000 Bitcoin last week, which is after some really bad performance in the share price. However, in maybe 10 years, 15, 20 years time, if the price of Bitcoin relative to New Zealand dollars is up a lot, we might not be talking about one Bitcoin. We might be talking about Satoshis. Those are the units beyond the decimal point. Even right now, like what I do when I'm buying Bitcoin, I buy relatively small amounts regularly. I'm just looking at the Satoshis, the sats, we call it. And if I can get 100,000 sats every week, that's something. One day, maybe, and maybe it's not my life, maybe it's my kid's life, maybe one sat is worth $1. There's a lot of sats behind one Bitcoin.
Well, we can all move to the Cayman Islands and
yeah,
bring our tinfoil hats. I do have to look at my Sharesies account, start considering whether I should have 1 to 3% exposure. Darcy Ungaro, host of the Everyday Investor podcast. Find him on YouTube and at Radical Investment. Appreciate your insights today.
Thanks very much, Andrew.
Before we go, most people treat their KiwiSaver the way they treat an old photo album. They know it exists, they know it matters, they never bother to open it. And that small act of neglect can cost them more than they realize. If you want clear, simple guidance on choosing the right provider and the right type of fund, you can talk to Wealth HQ without paying a cent. Maybe you like the thrill of crypto. Maybe you want nothing to do with investments that profit from conflict. Maybe you just want a sense of control over where your money goes. Wealth HQ strips the uncertainty out of the process. If you want to understand your options, the link below will take you there.